Alright, guys. Today we have a lecture on decoupled markets. Right? I'm going to be teaching you how to navigate decoupled markets with asset synchronization. This has been a highly requested video for a while, right? Because a lot of people, especially in index openings recently in the last couple months, where NQ opens up at like 9:30 and just shoots higher, while YM opens up and kind of just shoots lower, and we're kind of just like we don't know what to do, right? Because they're supposed to be correlated assets, but they're expanding in different directions. So in this lecture, we're going to be going over how to navigate the coupling. I'm going to show you guys the table of contents. So this is what we're going to be going over. So first we have the general idea as to why the markets decouple, and then you have extreme decoupling, another kind of like idea, and then you have asset synchronization, where you're gonna use strength switch to sync assets that are desynchronized, right? And then you have the types of decoupling, and then you have how to anticipate the direction of profiling, and then you have invalidations. So, starting off, chapter 1. The general idea as to why do markets decouple, right? Because they're supposed to be correlated assets, right? NQ and YM should be correlated assets. So why do the markets expand in different directions in index open? It's very, very simple, right? Let's get to it. So why do the markets decouple? When markets decouple, one asset is going against the true direction of the market, and that asset that deviates is manipulating a key level. So essentially, the markets decouple to manipulate, right? So if you have a chart that looks like this, and one asset decouples, right? What do you never want to trade away from low resistance, right? So the asset, when an asset decouples and does something like this manipulation, this decoupling is acting as a sweep for this asset, right? Because we got the decoupling and we have this manipulation right here. You can then treat this asset as if this asset has also swept this low. That is what an SMT is. So here you have 9:30 open. One asset expands lower, the other asset expands higher. So now you have a manipulation of this relevant level. This asset is decoupling to manipulate a low, namely this low. And now, because you have decoupling, in a decoupling scenario, guys, you're always going to be having an SMT, right? You just have to filter out which SMTs are high probable in the decoupling. So here, you have this asset decoupling and sweeping this low. So you're going to be having an SMT with this low and an SMT with this low. Right here, you have an SMT created via the decoupling. So what happened here is that this asset in a bullish scenario manipulates this key level, and that is exactly the purpose of that decoupling. So here you have the bear scenario where one asset decouples and moves higher, right? And we're going to be learning how to navigate these types of market conditions and how you know that the manipulation has done. How do you know if it's about to reverse? How do you know which direction we're going? We're going to be going over all of that, right, in this lecture. So chapter 2, we have extreme decoupling. Now you understand why the markets decouple. There is another case where the market decouples beyond the key level. We're going to be also going over how you're going to filter out this key level, right? Because if you look at this diagram here, we manipulate this key level, but if you look at this diagram, we don't manipulate this key level. But same idea, same consensus. One asset decouples and moves lower. So in this scenario, you have this opening up and then expanding lower, right? We fail to manipulate this low. So what happens when we fail to manipulate a key level, right? We go to the next key level. So we have this low. So what happens here is that we fail to manipulate this. We went to this low, and this acts as the decoupling, right? This acts as the manipulation, right? So this acts as if we swept this low on this asset. So naturally, again, you're going to have an SMT created via the decoupling with this low. So I'm going to be teaching you guys how to filter out this low as well, because we failed to manipulate that, right? But we never got any strength switch here. We're going to go in depth over that. I just want to show you guys an extreme decoupling scenario. Right here, one asset decouples and moves higher. Again, this is just a bear scenario. Manipulation, this asset decouples to manipulate a high in an extreme decoupling scenario. While this asset opens up and just expands in the true direction of the market, this asset opens up and decouples in another direction, right? And you have an SMT created via the decoupling. And you have asset synchronization. All assets can now expand in the same direction. Okay. So moving on, asset synchronization protocol. How do you use asset synchronization to kind of determine that the decoupling is going to end? How do you determine which direction the decoupling is going to go? Right? How do you know how to sync the assets? Because these two are correlated assets, right? So when one asset expands in the opposite direction of the market is going, you need to sync them together, right? Because this asset is bullish, this asset is bearish. If you want to sync them and you want both to be bearish, you need to use asset synchronization, and we're going to be using strength switch. In fact, we're going to be emphasizing on strength switch heavily on asset synchronization, right? It is basically asset sync is basically just strength switch, guys, right? You just have to know specifically what to look for. So here we have a form of strength switch SMT fill. Let me drink some water. Here you have a strength switch SMT fill, where you have asset 1 at 9:30 open, basically just opens up and trades higher, while asset 2, you have 9:30 open, 9:30 just opens up and trades lower. So you have a decoupling here. While asset 2 is bearish, while asset 1 is bullish. But what happens here? You have a failure to manipulate with the bullish asset. This is a bullish example, so we're going to assume a bullish profile in this diagram. So we failed to manipulate this key level, and we have this SMT fill strength switch. This is asset synchronization in the form of an SMT fill. So here, because this is 10:30 open, assume that this is the 15-minute chart. This is the 10:15. This is 10:15. You see how the more bullish asset is closing bearish and sweeping the low, while the bearish asset is going bullish and not sweeping the low, right? Does that make sense? So because this asset is stronger to the upside, you would anticipate this asset to not sweep this low, and because this asset is bearish, you would anticipate this asset to sweep this low. Because in a bearish market, we take out lows, right? In a bullish market, we take out highs. So this bullish asset sweeping the low, while the bearish asset not sweeping the low, is a form of strength switch. This bullish asset is sweeping this low in the SMT fill to allow this asset to kind of catch up to the same key level that the first asset took, right? We have failure to manipulate. We have an SMT fill at the low. This is textbook lagging asset, where you have a PSP, you have an SMT, and that allows this asset to also expand higher to the same key level that the bullish asset took. This asset is no longer bearish because we have synchronized the assets in the form of an SMT fill. Make sense? So here is the bearish example, where you have asset 1 basically opening up to go lower, while asset 2 opens up and trades higher, right? So what we get here is you get another form of decoupling. This is just the bearish example, right? But we're going to be going over this. So this asset is bearish, therefore it should not be taking out the highs. This asset is bullish, therefore it should be taking out the highs. But the bearish asset taking out the high, and the bearish asset, not taking out the high, is a form of strength switch. So this asset manipulates this key level, which is the fair value gap, while the same high that created the gap on asset 2 is not swept here, and that allows this asset to trade lower into this low. Okay, so one asset decouples to manipulate a key level. This is the decoupling. This is the key level that is manipulated, this high. And after we wait for either asset to manipulate a key level, you have a strength switch as your confirmation. And namely, we get the strength switch in the form of an SMT fill here. And then you have expansion to both sides. Because assets are synchronized now. This asset is no longer bullish. This asset is bearish now. I don't need this to turn bearish because it is already bearish. So now I can trade this asset lower into the same key level that this asset took. This is a textbook lagging asset trade. Now you have a strength switch PSP. This is the exact same thing, but this time it's just strength switch in the form of a PSP. So in this case, this is 9:30. 9:30 opens up and trades higher on asset 1. On asset 2, 9:30 opens up and trades lower. Right? You see that? So because this is a bullish example, we're going to assume a bullish profile. So one asset expands higher into a key level. We have price failing to manipulate, because this is not a reversal signature, right? A consolidation is a continuation signature. So what happens here, you have this asset manipulating this key level, this low. Notice how we don't do anything until we manipulate the key level. Sorry. This is different from here, right? Because as you can see here, we open up and we just directly manipulated that key level lower, right? We just manipulated it, right? But in here, we don't manipulate that key level until 12. It doesn't have to be 12. This is just a very, very ideal scenario that you have. We consolidate here. After this, you have this strength switch PSP, right? So this asset 1 is more bullish, therefore it should be closing a bullish candle. Asset 2 is more bearish, therefore it should be closing a bearish candle. But we have it the other way around. You have the asset that took the key level and the more bullish asset closing bearish, and you have asset 2 that is taking the key level and more bearish closing bullish, right? Because we failed to manipulate this key level and we get this strength switch, right, directly at 12. Notice how we don't do anything until we sweep a key level. A key level is very important, guys. It is the second thing that you should be looking at. The first one is the draw, and we already have the draw established here. You have a key level, so asset 1 has already reached the draw. Asset 2 has this high as your draw. Now, the second priority is your key level, right? It is all a profile. It's also priority, but we're going to assume a bullish profile in this because this is a bullish example. So now you have a draw, which is this high. What is your key level, right? I'm not expecting price to expand just like this without hitting a key level. Now this low is my key level, right? So we don't really expand until we get this key level. Now you pair that key level with a strength switch PSP, and that is the trigger for expansion higher. That strength switch and that asset synchronization. So this asset is no longer bearish because we get that asset sync, we get that strength switch. This asset is still bullish, right? I don't need for this asset to turn bullish because it is still bullish. It is bullish. It is the most bullish asset, so I don't need this to turn bullish. This asset is bearish, so I need this to turn bullish. And that is your asset synchronization for me to trade this asset higher into the same key level. Or if asset 1 has draws beyond this key level, I preferably would want to trade asset 1. Okay, so this is just the same exact chart, but this is a bearish example where the asset that is bearish is closing bullish, while the asset that is more bullish is closing bearish, and we don't expand until we hit that key level at the high, right? So what happens here? We get this key level, we fail to manipulate, so I know that the true direction is lower. We're also going to be assuming a bearish profile. So we have here is we don't do anything until we hit a key level. We hit a key level. Now what do you do after you hit a key level? You confirm it, right? So this is confirmed with a PSP strength switch and also a 2-stage at the same time. This is my favorite reversal signature. You can get this lagging asset trade to the low, or if asset 1 has draws beyond it, then you take asset 1. Now the difference between these two is that this asset, this trade is a continuation trade of some sort, right? Because if asset 1 has a key level past this low, then I can trade asset 1, or like past this high, I can trade asset 1. But preferably I want to take asset 2. This is a continuation sequence, while this is a reversal sequence, right? That makes sense? So you're just continuing the trend of asset 1, while in this scenario, you are trading in an asset 2 reversal. So this is when I would require a 2-stage, okay? So, let's bearish example. Again, this is the exact same confirmation, exact same scenario, except instead of a PSP, you have an SMT to confirm that strength switch, right? Exact same logic. 930 opens up. We decouple like this. Now the asset that is more bullish, right? Because in a bullish asset, we don't take out the lows, we take out the highs. In a bearish asset, we take out the lows. So the fact that this bullish asset is taking out the low, while this bearish asset is not taking out the low, is a strength switch, right? Again, note that we don't do anything in asset 2 until we hit a key level. Now we hit that key level, we have an SMT. Now what do? You confirm it with another SMT in the form of a strength switch, right? Where the asset that is leading is sweeping a low in a bullish format, while the asset that is lagging is not sweeping a low. This specific red line SMT is your strength switch, and that is the trigger for price to expand higher. So the trigger here is asset hitting a key level, while with a confirmation of a strength switch SMT in a decoupled setting. So now I don't need this asset to turn bullish because it's already bullish. Now, because of that strength switch, this asset is now synchronized and is therefore more bullish, right? Now this asset is turned bullish. I can expect this asset to trade into the same high, or if asset 1 has draws past this high beyond higher, then I can trade this asset higher. Okay? This is the exact same thing, except this is a bearish example where the bearish asset is taking out the high, the bullish asset is not taking out the high, right? We don't do anything until we hit a key level. So we hit this key level, we confirm it with an SMT first, and then another SMT in the form of a strength switch. So that is exactly what we get here, right? 9:30 open, we decouple. Now this decoupling is in the form of a manipulation. So this decoupled to manipulate this high. We get the asset synchronization, and then we're going to dump, right? That makes sense? We need a manipulation, so we don't do anything. So this entire move, right? So when you get this type of decoupling right here, like these types of decouplings, they're all a manipulation, right? Since this is like an assumed 15-minute time frame, this is one big manipulation in the higher time frame, right? This may look like expansion higher, which is why this is in a bearish setting. So we're going to assume a bearish profile. So assume we're going to have draws higher. You don't want to be getting lost in this, right? You don't want to be seeing this and think like, oh shit, we're expanding higher. So therefore, I should be looking for buys. This is why context is important, right? You need to know that this is in a bearish profile, and we're going to be talking about profiles later. Okay? So you're just this move higher is all a big manipulation at the highs, and we synchronize it with the strength switch SMT. Okay. This is the exact same format, except instead of a PSP, instead of just a normal PSP, you have a two-stage where the asset that is obviously bullish that is obviously more bullish is closing bearish and sweeping out the low, while the asset that is more bearish is closing bullish and it is not sweeping out the low. It is the exact same as these two. I just combined them. This is now a PSP confirmed with an SMT. So there's a kind of like three cracks in correlation here, which is really, really nice. This is the highest probable sequence you can ever see. If you see this, bro, like slam the buy button. If you see this, slam the sell, bro. This sequence is my favorite sequence, right? Apart from the reversal PSP. I don't need this second SMT to occur, actually. I don't need this to occur. It could happen without this SMT, right? Because this chart looks exactly like this, right? It's a simple PSP confirmation. I don't need it to sweep that. But if we do, then it becomes higher probable, right? Does that make sense? Let's move on. It's the exact same thing. This is just in a more calm setting. So we decouple at 9:30 to manipulate the high. We have your second SMT, right? While asset 2 is not manipulating a high, and we're not getting that SMT. But look, the high of 9:30 open on asset 1 is a gap on asset 2. So what's happening here is that asset 2 is filling this gap, while this high is a gap on asset 2. This high is not being taken by asset 1. So this is an SMT fill, right? You're trading a continuation on asset 2 and a reversal on asset 1. So we have 9:30 open on asset 1, opening up higher to decouple and manipulate this high. And then after we get that asset synchronization in the form of a strength switch SMT fill, right? You can now have both assets synchronized, and now we can expand lower. This is asset synchronization. A lot of you guys are asking me, do you need a gap on both assets? No, I only need one gap on both assets. So as long as one asset has a gap, it is fine, okay? It's just the same, just a bullish example, right? Strength switch SMT. Well, this low is a gap on this asset. We have this asset taking out this gap, right? Exact same thing. So here is a different example. 9:30 opens up higher. These are all just forms of asset synchronization sequences, right? Just cracks in correlation, right? So here you have 9:30 open, expanding higher. Wait, am I recording? Okay. So here you have asset 1 expanding higher, right? And you have this strength switch PSP. Now this alone is enough. Again, this alone is enough, but we get that SMT fill to kind of supplement and give us more confirmation, right? So it's the exact same thing as this. The only difference is I added a PSP in there. This should kind of make it high probable, right? So again, I don't need both assets to have a gap. This low on this asset, this low is a gap on this asset. So this is technically a gap fill. Only one stage would suffice here, so that's fine. Let's move on. Chapter 4. You have types of decoupling. So there's multiple types of decoupling in the market. Oh, dude, my water is out. Okay. So this is types of decoupling in the market. So there's different types of decoupling. Let's get into it. Hold on. So we have case 1, which is a decoupling and a failure to manipulate. This is very straightforward. This asset decouples to fail to manipulate. No, actually, no, I'm sorry. I have it the other way around. I'm sorry. So this asset decouples. Now, this asset doesn't sweep a key level, right? Assume that this asset doesn't sweep a key level. You have a failure to manipulate, right? Assume a bullish setting. Asset 2 does not need to sweep a key level for this scenario, right? But what is the required for asset 1 is that asset 1 needs to have draws higher, right? So when you have a failure to manipulate on a bullish key level, on a high, I mean, and it has draws higher and it is expanding higher, I don't need asset 2 to sweep a key level, okay? It doesn't need to sweep a key level. All I need is a failure to manipulate on this asset, right? And then I can just take a simple lagging asset SMT fill strength switch. Again, we discussed that this is a form of a strength switch to synchronize the assets higher. So what's happening here, this asset does not need a key level, right? Because this asset is failing to manipulate this high. So what's happening is that the market is telling us like, yo, bro, I'm bullish, okay? Like, I'm bullish. I'm going higher. I'm not going lower. I don't need this to manipulate a key level because we're going higher anyway, right? And I'm trading this in the context of a lagging asset, but I need asset 1 to have a drop beyond it. If not, if it doesn't have a drop beyond it, I need a strength switch, okay? So again, so for this second case, you have a spaced out decoupling where 930 opens up and we expand lower just a bit too much, okay? We expand lower just a bit too much to the point where if you see this asset, if you see this third asset, do you think it's going to make it to this high? Probably not, right? But you have this key level on both of these assets. You have a spaced out decoupling. So we're not going to pay attention to this asset. What we're going to be looking at is ES and NQ, right? I mean, NQ and ES. So a lot of the times this is going to be NQ, this is going to be ES, this is going to be YM. So ES is almost always the middle asset, right? So NQ takes a key level. We fail to manipulate. We have the strength switch between ES and NQ. Now note, I don't need ES to not have that sweep, right? ES can sweep this, right? I don't really need ES to not sweep it. So now, is there a strength switch between NQ and ES? No, there is not, but there is one with YM. Because ES is the byproduct of how NQ and YM move, because you have that synchronization with YM is now bullish. We're only trading the middle asset because the middle asset has better proximity to the draw. Can I anticipate YM or the third asset here to hit this high? No, right? But I can anticipate the middle asset to break that SMT at the high. I don't need a strength switch, right? This ES can take this low, ES cannot take out this low. I don't really mind. What is important is you have the leading asset and lagging asset strength switch. In this scenario, we have the strength switch here, where this asset is sweeping out this low, while this asset is not sweeping out this low, right? You have that. And now you have a strength switch between the two. This asset is no longer bearish. Now I can trade this higher because this asset is synchronized. These assets are synchronized now. This is no longer bearish. We're now bullish. But I'm not trading this asset. The only difference here is that because of this asset's proximity to the high, it is almost always better to trade the middle asset. Okay? Make sense? So in the decoupling setting where one asset is very spaced out, we trade the middle asset. So here, you have pure decoupling, right? Where the market's just like, we're not synchronized today, dude. Like, we're not going to be doing all that. Like, YM is like, yo, dude, like, being bullish is like way too hard of a job for me. I'm just going to keep falling. This is when you use NQ and ES and YM and RTY. So in this scenario, you have NQ at the open just trading higher, while YM at the open is just blatantly trading lower. I cannot trade both of these assets because they are purely decoupled. This is a negative condition, right? So you want to use ES and NQ and YM and RTY in this scenario, okay? So you have NQ and ES here. NQ and ES, you're just trading a lagging asset here. So as you can see, NQ sweeps out this high. You have an SMT fill strength switch, and you have ES not sweeping the high. You have that strength switch. You can take that, right? This is a strength switch because NQ, the asset that swept out the high, is now filling this SMT. This is more bullish than this, right? So the fact that this is sweeping this low and this is not sweeping this low is your strength switch, and that is price telling you that price is going to go to this key level. Of course, you need a displacement away from that, but that is given. Kind of the same thing with YM and RTY. If YM, this is like one scenario, right? So if this is just expanding higher, this is just expanding lower, I can trade either RTY or ES, right? That makes sense? Okay. Our chapter 5, guys, you have anticipating the direction with profiling. So in a decoupled market, you're not just blindly trading failure to manipulation. You're not just blindly saying like, okay, well, a lot of you guys are kind of confused, right? Because in a decoupled setting, it's like one asset going higher, one asset is going lower. Like, how do you know which asset is going the true direction, right? Because if you look at the very first slide, the very first slide here says that when markets decouple, one asset is going against the true direction of the market. So how do you know what the true direction is, right? So that's what we're gonna be going over here. Anticipating the direction with profiling. I built a kind of a flow chart. It's a very simple, right? It's a very simple flow chart for you guys. So in a bullish profile, one asset decouples. That move lower is a manipulation. I think this should have been like in the first slide, but whatever. So in a consolidating market, when one asset decouples, either side is going to fail to manipulate a key level, and that is when you trade a lagging asset, right? It's the exact same thing as this. Where is it? Hold on. Yeah, here. Like in this scenario, if we are in a consolidating market, so assume a consolidating profile, price is just gonna shoot higher, and now because this is the asset that failed to manipulate, this asset is just going to follow. It's just basically simply a lagging asset trade, right? In a consolidation market, right, guys, a lagging asset trade is the highest probability trade you can take. Why? Because it's like seeing to the future, bro. Like you already know where one asset is going, and so like if you have displacement, if you have everything, it's like you already know where the lagging asset is going based on how the leading asset is going, right? So like for example here, if this asset is going higher and it's just going higher, it's kind of like seeing the future on this asset. It's like kind of seeing where this asset will eventually go, right? And that is what you do in a consolidating market. So in a bearish profile, asset decouples, and that move higher is a manipulation. So I kind of made a diagram here. So if you are profiling a decoupling, in a bullish profile, any move lower is considered a manipulation, okay? So you shouldn't really be guessing, right? Because if price opens up and we expand lower like this, you shouldn't really be looking at this as like, oh shit, we're bearish because one asset is going lower, right? In a bullish profile, you need to maintain your bias, right? Now, when would I be bearish here? We're going over that later in invalidations, but for now, in a bullish profile, any move lower is considered a manipulation. Now, you have S&T, you have the asset resync, so trade higher. Now, in a bearish profile, decoupling, one asset manipulates, right? This is a bearish profile, so we're looking for sells. We have this manipulation at the key level created by the decoupling right at the open. So now you have that asset synchronization. This asset could now expand lower, okay? Now in a consolidation, you have a manipulation at the high. So assume this is a consolidating profile. Price is not going anywhere. Price manipulates this high. Price, okay, so here asset 1 opens and moves higher. Asset 2 opens and moves lower. Now this asset manipulates the high. This asset fails to manipulate the low. So what direction are we going now? We're going lower because the leading asset is failing to manipulate this low while this asset is manipulating the high. So what's happening here is that In the consolidating market, the markets try to move in opposite directions, right? So they're being pulled in opposite directions. So what happens here? We tried to go higher, we failed, right? We tried to go lower, and we succeeded. So the true direction then is lower, and you can trade this as a lagging asset. Okay. Now you don't want to be trading ES in these type scenarios, because ES is going to be fighting for its life once this happens. So this is a bullish scenario, consolidating asset. We're just kind of going here, or we're just kind of going sideways. This asset opens up and manipulates the low. This asset opens up and manipulates the high. So now you have a manipulation on both sides. How do you know which one is the manipulation? You don't know which one is the manipulation, because we're consolidating, right? We don't know where the market is going. Compared to this, like this is a bearish profile, this is a bullish profile. I know the market's going higher. So I know that this is a manipulation before we even manipulate it. In fact, before 9:30, I might be like, okay, I want price to manipulate this also, we can go higher. That is different in the consolidation. In the consolidation, I don't know what price is going to do. So I need price to tell me what it wants to do, okay? So what happens here is it's going lower, right? So imagine these two candles don't exist yet. So now you have a manipulation at the low, and you have a manipulation at the high. You're like, where is price gonna go? Which one is a manipulation and which one is the true direction of the market? I don't know. How do I know? You wait for a failure to manipulate, and you trade the lagging asset. So you see how I actually didn't get to mark that out, but you have an SMT fill here, right? And that is the resync for you to trade this lagging asset higher. Now, I want to emphasize this, okay? In the consolidating market, you have price sweeping out both sides, which is buy side and sell side. I don't know which one is the sweep. I don't know which one is the true direction, because we're in consolidation. We're going sideways. How do I know? You wait for it to confirm. You wait for the market to tell you where it wants to go. So if you're unsure of the bias, if you don't know what to trade, it is the easiest way is to always just trade a lagging asset, okay? So we've gone to the final part of the lecture, which is invalidation. So here we have invalidations, where your idea is going to be invalidated. Right? So this is a bearish invalidation. I assume a bearish profile. I probably use this exact same there again like 4 times. So it is different, right? Because in here we're assuming a bullish profile, but here we have a bearish profile. We're assuming a bearish profile, so we're looking for sells. So what are we expecting? We're expecting this asset to manipulate this key level, right? We're expecting this asset to manipulate this high, but what do we get? We get this asset failing to manipulate and expanding higher. Now you get that strength switch, and you can trade this higher. Again, in this scenario, if asset 1 has draws higher, I don't need asset 2 to manipulate anything. I just need this to fail to manipulate this high, and that invalidates my bearish idea. So again, coming into 9:30, I'm expecting price to, because we're bearish, I'm already looking for a sell, so I'm expecting this move higher to be a manipulation, but we don't really manipulate. So that is how I invalidate my idea, because we're failing to manipulate this. Therefore, asset 2 or the middle asset should catch up to the same high. Now this is a bearish invalidation. This is a bearish invalidation profile. So in a bearish profile invalidation, it's a bullish fail to manipulate. This is the exact same thing as this, but this I actually added this so you can kind of see that we're in a downtrend, right? We're in a downtrend. What do? We're opening up 9:30, and I'm like, okay, I want price to sweep this relevant high and then trade lower. It's kind of the exact same as this. So I want price to sweep. I want price to sweep this high and then go lower. But what do we do here? We don't sweep the high. Instead, we get a failure to manipulate. We get a gap, right? So that bullish gap invalidates my bearish idea. And what we have a strength switch SMT fill, what we discussed earlier as a strength switch SMT fill. I only need the one stage. And therefore, because we're getting that failure to manipulate in a bearish trend, I'm no longer bearish. I am switching my bias now to bullish. So now, can I trade this asset? No, I can't, because we're bearish, obviously. So I don't know how far this wants to go. I don't know how far it wants to invalidate my idea. But what I do know is that I know this asset is going to this high, because again, trading a lagging asset is like seeing into the future, bro. It's like knowing or price is going, where the lagging asset is going, based off of where the leading asset is going. Again, I don't know how far this asset wants to go, but what I do know is that this asset is going to catch up to this asset, so you're going to trade this into this high as a lagging asset as a bearish invalidation. Okay, so it's the exact same thing, bullish invalidation, and we're assuming a bullish profile right here, right? We're assuming a bullish profile right here. So I'm coming into today, I'm like, okay, I want price to sweep this key level, but what do? We form gaps lower, we invalidate but that bullish idea. So if you look here, you go like this. I'm coming into the day, as you can see, this is a bullish profile, we're in an uptrend. So I'm like, okay, I want price to sweep this low and then continue higher. But what do? We take the low, but we form a bearish gap, and we're failing to manipulate this low. So therefore, I don't know how far this asset wants to go, because again, this is a bullish profile, so I don't know how far it wants to invalidate my bullish bias, right? But what I do know is that this asset, or the middle asset, is going to sweep the same low. We have the strength switch SMT for right there. This asset is going to sweep that same low, and you have that bullish invalidation idea, and I can short this in a bullish uptrend. Now, this is the exact same thing as earlier, but this is just a form of invalidation in the form of a pure decoupling, right? You have NQ and ES here, where it's just going higher, this is just going higher, this is just going lower, this is going lower. You just want to skip the day, okay? If there is no setups formed, and NQ is just going higher, YM is just going lower, you just want to skip the day. That's it. You can't really do anything in this scenario. You just have to kind of skip the day if you have nothing presented. In this scenario, I'll probably just be looking at oils or maybe gold or metals or something like that to trade. I would just avoid indexes entirely. But yeah, that is the asset synchronization and decoupling markets lecture. We're going to go over some examples now, okay? Bet. Or I have an example of another decoupling right here with a resync with an SMT and a PSP. It's a gap fill. It's very, very textbook. It is also trading away from failure swings. So let's begin. I'm going to give you guys the top-down approach. So first of all, both assets are at all-time highs, right? So as you can see, we are trading at all-time highs on NQ, and on YM as well. We are trading on all-time highs. This was the previous one, and we traded above it, right? And also one thing to note, that the weekly wick is also pretty large. And again, when you have a weekly wick that is huge, or any higher time frame candle that is huge, really, you are going to have the highest probability sequence in both ways if you short high of week or you long low of week back into the open. And that is exactly what we get here, right? We are shorting from the high of week directly into the open, and that is also the case with YM. So we kind of have a bearish bias here, given that Monday is opening up and trading higher, kind of creating the high of week. And we have SMT with the previous day's high right here on NQ and YM. So we are entering the day with a bearish bias, really, okay? So hopping on to the intraday chart, you see what Asia did? Let me turn on the open so you guys can kind of see it. So you do have the open right here, and what do we do with the open, right? Open was kind of, the 1800 open was just kind of uneventful, and for the rest of the day we didn't really do anything until come 9:30, where we get that decoupling. Let me mark out 9:30 right here. This is 9:30. So at 9:30 we get straight decoupling, right? And you can't trade this because there is decoupling. There's also kind of no sequence. So you see how YM kind of just shot up and it traded into nothing. It is worth noting here that there is no other key level. The only key level you have here is all-time highs, which was right here. Right, this is all-time highs. And we already kind of failed to manipulate that. So what 9:30 here is kind of just trading higher for nothing, right? It is not really doing anything. Same as NQ. So it is what I mentioned before, that you don't really need a key level to be hit if the leading asset is failing to manipulate a low and has targets past it. So in this case, it is the low that we are failing to manipulate. So this is the low that we failed to manipulate right here. It is this same low on YM. And because this is failing to manipulate and this kind of has no target low, right? So it is preferable that we get a strength switch, and therefore when we get that strength switch, it allows me to trade YM lower to the same low that NQ took, which was namely this low, right? This is like the low hanging fruit, but if you want to be sure, you could just trade back into the 930 open. A low hanging fruit is always acceptable. Now what do we get here? The more bearish asset, the leading to the downside, we get this strength switch right here. You see the 10 a.m. high is the highest point on YM, and the more bearish asset, 10 a.m., is closing bullish, while the more bullish asset, which is YM, is closing bearish. So that PSP itself is already a strength switch, and to get the cherry on top, we got that SMT fill strength switch, where the more bearish asset is taking out this high, while on YM the more bullish asset is not taking out the high, right? And this allows NQ is going to give way for YM to be the more bearish asset, and therefore kind of catch up to where NQ is. There's no more draws higher, so you're kind of just very textbook short here. And once you get that SMT fill strength switch, right, you could short really anything that V-shapes lower here, right? This is what I took. I took this CSD lower. I wanted to take this gap, but since I didn't trust it, I just waited for the lower time frame to create a gap, which was this, and that kind of tells me, okay, price has reversed, and I put my stop up there, and I was targeting low hanging fruit, which was the 930 low, right, for a 4.5R. Very textbook asset synchronization that we have right here on the 30-minute. I would take this every single time it forms. That is the narrative right there. You have the narrative. You have a small wick on the daily as well on NQ, so that allows NQ to go lower. And again, the same logic that we're applying to the weekly, right, where we're shorting high of week in a reversal candle, right? And it's also the same exact one fractalized on the daily, right? You're shorting high of day back to the daily open, which is always going to be high probability. We get that textbook asset synchronization right there. Perfect trade. And that is another example on September 23, 2025. Let's move on. All right, so here we have an example from last year, September, right? If you look at the weekly wick starting off, we kind of have like a large wick to the upside, right? We're already kind of at the open. So I'm not really looking to target anything further other than the open, because I can't really anticipate anything expanding past the open. But what do we get here? We're trading very high, and we haven't taken any form of previous day's low yet. So your low hanging fruit here would be the previous day's low on all assets, given that we have not swept any previous day's low here on both, and we're kind of opening near it, right? So what do we have on this daily candle? So we open up the daily candle and we protract higher. This is the open. We protract higher, and then during New York we get that decoupling that allows us to kind of trade this lower. Let us look at 930 now. Let me mark out 930. What do we do at 930 here? With our bearish bias, we're looking for shorts, of course. What do we get at 930? We get this open, this beautiful open. We manipulate higher, which is an SMT that looks like this, right? You kind of have an SMT that looks like this. Right, look at that. So what's happening here is that this asset is manipulating decoupling to manipulate this high, basically, right? So it is deviating from our bearish bias to manipulate this high, and then with that high manipulated, you could treat NQ as if it took that high, right? You kind of view it like this if you wanted to, but yeah, now with our bearish bias, I would want an asset synchronization. So what do we get here? 930. Right now the NQ is dropping. What am I looking for? I'm looking for NQ to sweep some form of high while YM doesn't. Now pay attention to this. The small details that matter, right? You see how this 50-minute candle is closing kind of above EQ of the body. If you measure the body, we're kind of, the entire candle, we're kind of closing above EQ. And if you look at YM, it has sort of a stronger close to the downside. You see kind of closing below EQ. So that already in of itself is kind of like your signs of a strength switch, right? You're opening up at 10. Now I'm expecting NQ to fill this gap ideally while YM leaves that high. So you see the 945 high on YM is farther than NQ. So I'm expecting 10 to open up, form the high of the 4-hour wick at this gap before we trade lower. So what do we get? We get exactly that as your asset synchronization, right? You get that strength switch right there. And now we are looking for shorts. Now here is something interesting about this day, right? We get that, but we get a resweep here on YM, right? Which is no problem because we're going to drop down to the lower time frame and you're going to see that we haven't V-shaped lower yet. So you wouldn't have taken anything anyway with this first stage. Now, why do we have two strength switches here, right? The first strength switch is a gap fill that allows YM to catch up lower. Now, we do get the second strength switch, which is fine because we still got that asset synchronization and it is completely valid because we have a draw open at the lows. That strength switch, that second strength switch, the most relevant CIC, is going to be used to deliver NQ lower, and now we get that asset synchronization with that strength switch. Let me clear this up for now before I show you. Afterwards, after you get that signature, which also happens to be an AMD reversal or AMD continuation in this case, on the lower time frame with YM, after that immediately just look for a V-shaped lower. And what do we get? We get that V-shaped lower. Actually, the V-shaped lower already happened here, my bad actually. So you can see that is your cracking correlation. You get that V-shaped lower, you have that CSD lower here. Kind of an ugly delivery by YM, but we do get it nonetheless. And what are we targeting? We are targeting the previous day's low for around the 2R. So you can see price kind of consolidates around the area, but ultimately we hit the low. There we go. Kind of one thing to know here is that 1024 closure on YM, NQ is also V-shaping, so we can see that NQ wants to reverse lower. There is no CISD here on the 3-minute, but you are going to get one on the lower time frame in the 1-minute anyway. In that case, it looks like this. And that is a very, very textbook example of a short from last year, September. Let us move on to the next example. Okay, I have an example for you guys of a decoupling, but that decoupling is at the higher time frame, not at 9:30. So if we go first to our weekly candle first, we have a large wick to the upside, right? So again, when you have a large wick, the highest probability sequence is trading it from the high all the way back to the low. So that is exactly what we're trying to get. As long as you capture the high of the candle, it is completely fine. So what do we see here in the daily, right? We have this 2 stage at the daily, right? Where you have a PSP and you have a sweep at the high. You have a bearish PSP here, doesn't sweep the high. Although there is no strength switch here. Not really something you could align the assets on. So let's move on to the intraday. But we are looking to trade this bearish given that we don't really have any more objectives to the left. This is at all-time highs. And if you see, we have not been taking anything. So when we take this relevant high on NQ, either we're looking to trade YM or ES into these same highs, or we're looking to trade lower, right? Now what do we get? Do we get a failure to manipulate, or do we get a reversal? We get some sort of reversal sequence. So what do we get here? Let me play this back a bit. Let me play this back to 9:30. So what do we get here, right? First off, we have this massive SMT at the highs like this. You have this massive SMT at the highs, whereas you can see this high on YM, right? It kind of looks like this, right? But I want to take your attention to this high. If you look at this high on YM, it is this high on NQ. And this is when you could sort of use proximity ranges, right? You don't exactly need to mark out an SMT like this, as long as you're marking out the highest SMT, because if you transpose this to the weekly time frame, technically it is just a weekly SMT, right? It is just simply a weekly SMT. It doesn't matter exactly what high we form the SMT with, it is going to be there, okay? So we have this massive SMT at the highs, first off. right here. It looks like this. Now again, if I want to synchronize these assets, what do I want to see? I either want to see one of three things. We expand lower, we create gaps, and I want this asset that is stronger to the downside. I want this to sweep out this gap, and I want the lagging asset to not sweep out the gap like this. And that is your strength switch, right? Because this asset is more bearish, I want to see it not respect that gap, but because it actually takes that gap, sweep, because it actually sweeps that gap, that is your strength switch, and that is your asset synchronization, that is your alignment for price to go higher. The second scenario is I want to see a strength switch PSP. So I want the asset that is more bullish, I want it to close bearish, while I want the asset that is more bearish to close bullish, therefore giving me a strength switch PSP. Now the last one is a strength switch SMT, where I want this asset that is more bearish to sweep out this high, where we open up, do something like this, so we have a second stage SMT for us to go lower, and I want this asset to kind of open up and then not sweep out this high, because this is leaning more bullish, this is stronger to the upside. I want it to not sweep out a high for the strength switch. Now let's see exactly what we get here. So at 9:30, exactly 9:30, we get that asset synchronization. This is your strength switch. As I aligned with one of the three situations I am looking to trade, we get the third situation, which is an SMT strength switch. Right now, after that, I can expect the assets to both be synchronized now because we get that strength switch. You want to be trading YM here because YM is overall weaker in the range. This strength switch at the high or in this range is a temporary strength switch. YM overall is still the leading asset to the downside, so you want to look for a V-shape on YM here to trade this. You want to wait for all assets to V-shape. As you can see, NQ is starting to trade lower, but you could take this CSD right here, put your stops somewhere in this range, because at that time we already kind of have the sweep. We have the second stage SMT, and we're getting this NQ V-shaped lower, so this is sufficient for me to take this to the lows. I'm not expecting a huge expansion past the open because we have some sort of decent sized wick. As you can see, the wick here has a pretty decent size. It is two-sided, so I can still expect it to have some form of expansion past the open. Now you can wait for a retrace here. I just kind of want to enter right here, and I'm pretty sure you could refine it to the 1 minute as well, whatever trading model you take, as long as you are targeting a valid drawn liquidity. Let's play this out. As you can see, we get that dump lower, right? Beautiful. Very textbook asset synchronization right here. The strength switch SMT allows the assets to be synchronized and allows the assets to move in the same direction, right? This is strength switch. Dude, very, very beautiful concept. If you truly understand what strength switching is, you're gonna see the markets differently, man. Let's move on to the next example. All right, so this example, we have more of a higher time frame range. So this is a very, very interesting case study that I have for you guys here, okay? So the decoupling here isn't more on 9:30. I mean, it's less in the 9:30 and more on the actual range that we are trading in. So if you pay attention to this high, which is right here, you see NQ is trading above that high while YM is trading below that high. So you're getting kind of an advanced premium and discount sequence here. And the very, very important thing is that we are trading into a relevant high, right? Beyond this high, the next high that you could target is this, right? I don't care about this gap. This gap is irrelevant to me, okay? I'm only looking at this as my next relevant target, but since that is very far away, and if you look at where the weekly opens, right? We kind of have like a small weekly wick, but at the same time we're trading in a range, right? We're kind of just ranging. If you look at the daily chart, we are just ranging right here. We're not really doing anything. We're staying inside of this Friday candles range. So we sweep a very relevant high, and I'm expecting a reaction off of it, given that even though we have a small wick on the weekly and the daily, there's no more objectives higher. So I am expecting this day to close as a reversal day. Now again, when you are trading a large wick higher time frame candle like this, the highest probability sequence that you are going to get is shorting from near the high back into the open, right? If the daily candle or the higher time frame candle kind of already looks like this, where of course this is when it expanded, but it already looks like this, that means it had already traded back into the open, and therefore it's kind of not high probable anymore. So the only thing you could do here is trade it back into the highs if you have a narrative. Now our narrative here is that we want to short this because number one, relevant high on the daily, no more objectives past it other than all-time highs. Number two, we're kind of trading in a higher time frame range. We're staying inside of this candle, and in a range protocol you are expecting highs and lows to be taken. And so we have all of these lows that are kind of stacked, and we have this advanced premium and discount sequence with YM. So what do we get here? We have a sweep at the highs. This is currently at 10, right? We open up 930, kind of do nothing, kind of consolidate. Now, because we have this high, what am I going to look for now, right? I need a strength switch to synchronize these assets. That is in the form of what? So either we expand lower, we get a gap, and this weaker asset, the asset that is more bearish, I wanted to sweep the gap, while this asset that is leaning more towards bullish, stronger to the upside, weaker to the downside, I want this to leave that gap open, therefore giving me that strength switch, therefore allowing me to synchronize the assets together, right? I want this to turn bearish, so I don't want it to sweep a high. Or we could get some form of two-stage SMT where this asset doesn't take out this high, where this asset takes out this high, right? I want to see how we play out, so I'm going to mark this high. Either we sweep that high on YM, either we sweep this 10 AM high on YM, or we expand lower and we get that gap sequence that I just mentioned, right? Also, we could get the strength switch in the form of a strength switch PSP, where we create a swing point. This asset that is leaning more bullish is going to close bearish, while this asset that is already bearish, I want it to close bullish. So that's the three scenarios we're going to be looking for here. Now let's see exactly what we get. We get that alignment right there. 11 AM opens and we get that high sweep. So if you pay attention to this 1030 high, as you can see, the asset that is more leaning higher is not sweeping out this high, while the asset that is obviously bearish is sweeping out that high. There is your strength switch, there is your asset synchronization, and now given the V shape that we have, I can expect both assets to be synchronized now and to expand in both directions. Again, we are in a bearish profile, so this is exactly perfect. This is what we are looking for, right? This is what we are trying to anticipate. So immediately after that strength switch forms, you wait for a V-shaped lower. Now you want to take YM here because YM is obviously the weaker asset. Now even though we had that strength switch and YM swept the high, you still want to take the overall leading asset, right? And if you look at this range, this strength switch, this is temporary, right? This is a strength switch used to synchronize the assets. And so this is still overall bearish. This is still the closest to my drawn liquidity. So you want to take YM here, but you could not go wrong with any asset. So if you play this out, as you can see, we get the beautiful delivery lower on both assets, right? If you took YM, you would have taken this V shape right here. You would have targeted some form of low. And if you take NQ here, you would have taken again that V shape, and you would have targeted the open, because the open is a very high probable sequence. Of course, you could extend it past the open, right? But I can't anticipate any expansion past the open given the large daily wick, so I can't expect it to reach this low. I can only expect it to reach potentially this relevant level. Let's see. There we go. We hit that relevant level. You cannot really go wrong with trading any asset here. Why? Because the assets are synchronized. Okay, so let's move on to the next example. All right, I have a very, very clean setup here on YM, longing to all-time highs. All right, let's begin our analysis on the weekly, as always. Given that the weekly, we have a small wick on both assets, and obviously we're opening up the week after an expansion weekly candle previous, so I'm expecting price to continue higher and respect and form low of week above EQ of this gap on both assets, which what we get here. So that is wonderful, right? We form the low, and we are obviously targeting all-time highs here, all right, on both assets. So we formed the low of the week right there, and now again we have Monday expansion, you have a Tuesday continuation, right? So I'm expecting Tuesday to form its low above EQ of this range as a classic continuation signature. Now dropping onto the 4-hour time frame, or maybe the 6-hour if you want to use it, because there's 2 gaps on the 4-hour, right? We have price. If price is going to continue higher, there's no other area to do it rather than this gap, right? So it should be very, very obvious we are going to continue higher. We have a sequential 6-hour SMT there, but I want to take your focus on what 930 does, right? If you look, we already kind of have an established low of day, an established reversal right here in YM, right? And what does 930 do? This is 930 on both assets. What does 930 do? We decouple, and since we have a bullish bias, NQ is decoupling to manipulate this low to deliver us higher, right? So NQ manipulates this low, decouples to manipulate, while we have a continuation signature here. Now what do we need, right? Obviously we do have this first stage SMT right here at the low with that manipulation. Now what do we need? We need a second stage. We need a synchronization. So what do I want to see here? I want to see YM sweep out a low while NQ keeps this low open. That is very, very preferable, and that is exactly what we get in this next candle. So what do we get here? You have YM opening up and sweeping this low while keeping this low intact, and NQ, as you can see, we didn't actually sweep that. That is your asset synchronization. This is your strength switch, and this effectively syncs the assets, right? And I'm expecting every asset to expand higher now. Now you could take YM here to all-time highs. As you can see, right after I get that sweep, you have that order block. You take this and you could target all-time highs with that for a very, very nice RR, right? Let it play out. Or it's kind of unfortunate because NQ decided to resweep this low, but you would never take NQ in this scenario, right? If you want to take something that is not YM, because YM is very high in the range, it is very fair for you to kind of not want a long YM here. You want a long ES instead, because NQ is the lagging. If you can't trade the leading, this is when you trade the middle asset, right? And that's exactly what we get here. We're kind of trading ES to the same high, and basically the exact same entry in YM, right? After that second stage, we have this CISD higher on ES, whatever entry you want to use. We have a very, very good RR here with ES. Don't like this deep retracement, but if you look at this entire move higher, there really wasn't anything that you could use to kind of invalidate your bias. Maybe I would probably trade it to this week's low, but other than that, we don't really have anything that goes against our bias for me to set my stop loss at break even, right? There's no invalidation here. Throughout this entire move higher, the true invalidation stayed at this low, so you would have been fine with this move if you took ES. You never want to take NQ here because, again, it is the weakest asset in this move, right? Ideally, you take YM, but if you don't want a long high of day, you could always take ES. Very, very textbook. Look at that very clean expansion higher in YM, right? So with that, let us move on to our next example. All right, here we have January 2, 2026. You have another textbook example of asset synchronization. Let us begin with the weekly time frame. As you can see, we're bearish on the week, right? Because we have a small wick at the highs. We're kind of delivering lower here, and we're targeting lower prices. But one thing to note here is that the weekly wick could expand for as low as it wants to because it has a very, very small wick. And you have Friday here as kind of like your reversal candle, right? You're trading a large daily wick here. Although the wick on YM is kind of nice, we have Friday here taking in this daily gap. You have an SMT fill right there. This is your SMT fill. This gap, obviously it's this gap on YM. You're getting the SMT fill with. But again, when it comes to trading a large wick from this open and this high, you're going to have a very, very high probability shorting from the high back into the open. And now because the low of Thursday or Wednesday in this case, because January was a bank holiday, because the low of previous day is very, very close to the open, I can kind of expect that to be taken. So coming into the intraday with our bearish bias, we get 1800 open and we protract higher. This kind of creates the large wick of our daily candle. And what do we do directly at 9:30? We do a bit of decoupling at 9:30 right here. Let me mark out 9:30. This is 9:30. Boom, 9:30 right there. Now what do we do? NQ trades higher for 9:30. We get that SMT fill. This 9:30 high is what creates the SMT fill. Let me mark that out so it's easier to see. See the 30-minute 9:30 open? We sweep out that high, and then what do we get here? Right? Pay attention to this 9:45 high on NQ. On YM, that 9:45 high is a 15-minute gap, right? And we're getting that, you're getting that asset synchronization, right? Because this more bullish asset should be taking out this high, but it's not, and that is your strength switch right there, right? This is your strength switch, where this asset that is leading to the downside is giving way for this asset to catch up to the same low that we took on YM, which is previous day's low. But I am targeting 1800 open here just for the sake of safety. And then after, the sake of low hanging fruit, sorry. And then after we get that strength switch SMT fill, we have this textbook reversal, right? You get this V-shaped lower. You can enter here, put your stop above somewhere in there, target the open for a 3.79R. Very, very textbook asset synchronization right here with that SMT fill as your strength switch. As you can see, it's very, very easy to kind of spot these, right? When you're seeing this asset dumping lower, all you need is this asset to sweep a high, preferably a gap or a 90-minute level, and that is your strength switch. And you want this asset to not sweep out that same high, wait for a V shape, and then target the lagging asset. This very, very textbook lagging asset trade. Let's move on to the next example. Alright, this example, I have an example for you guys on when you should stop looking at YM. And again, I had an example from a fees, right? When you use YM and RTY. Now I have an example of when you should use NQ and ES. So the profile in the weekly is we have a Tuesday high of week profile, where as you can see, Tuesday made the high of week, Monday trades higher, Tuesday makes the high of week, we expand lower. We have an expansion, reversal into expansion weekly profile. Right? If I mark out EQ of this previous candle's wick, as you can see, we are bouncing off of the EQ of that wick. So I am expecting price to target this low and as well as previous day's low. So it is an expansion weekly candle, continuation expansion, and you have a continuation expansion Wednesday profile, right? So I am expecting the high of week to be formed below EQ, of this candle. So where do we form the high of the day? We form that inside of a 6-hour gap. Now I don't like YM here particularly because of these failure swings. Now I would want to see these failure swings get ran at market open if I'm looking at this. And then my expectations would have been, let me move this back a bit to 9:30 first. Expectations could have been for us to at least sweep this high, right? I wanted price to kind of sweep this high, and then we get a strength switch SMT where price doesn't sweep this high, and here we have NQ sweeping out a high instead of YM, and that is your strength switch. But if you look at what happens at 9:30, we never get that asset synchronization. It's also kind of ugly because YM left these equal highs. Now I would have given it grace if the ideal scenario here is that YM sweeps this high, we get a strength switch where YM doesn't sweep but NQ sweeps something. That is your asset synchronization, but we never got that. We also left equal highs. Now I would have given it some chance if we actually didn't sweep this high and NQ did, and that is why I'm kind of disregarding this asset, because we never got the strength switch, we never got the asset synchronization. If you look at RTY here as well, as you can see, we are also leaving this failure swing, so you have pretty ugly framework when it comes to YM. Don't really want to touch this asset, so this is when I would be looking at ES instead. Now ES has an identical profile to NQ if you look at the daily. Again, another high, Tuesday high of week, and I'm expecting price to continue off of this EQ of this previous candle's range. Now you have the 4-hour, You have high of day being formed in a 4-hour gap, which is also a 6-hour gap. Right? Beautiful stuff. There you go. You have your high being formed in a 6-hour gap. Now, there is no strength switch here. There's no asset synchronization here between NQ and YM. What we do have though is a gap fill on NQ. As you can see right here, this is your gap fill on NQ. This 8-hour high on ES, which is not a gap, is a gap on NQ. This 8-hour high on NQ, we got that gap fill, hourly gap fill, and you only need a 1 stage for a gap, right? Now after that SMT, you are just looking for both assets to V-shape lower, which is exactly what we get here. This order block is kind of huge, and this is when I would opt to use the 1 minute personally. Now we get both assets V-shaping lower. Right, I want to trade this. I want to trade NQ as soon as V-shape lower. So that's what we get here. So this 950 closure, that is when I am taking NQ, putting my stop somewhere in that high, somewhere in the proximity of that high. And again, because this is a continuation day, I am going to be targeting previous day's low, which is here, as well as the previous weekly low, as well as these lows and some lows beyond it. Okay, so let's play this out. Let's see how it plays out. So as you can see, we get that beautiful expansion lower here on NQ. It looks better in the 5 minute actually. Yeah, okay, there we go. We get that beautiful continuation lower on NQ, ultimately hitting our targets lower for the day. For a very, very nice RR continuation, that is when you should use NQ and ES. Let's move on to the next example. Alright, so here you have another example of a decoupling that is pre-9:30. So let me walk you through. Let's start with the weekly time frame. As you can see right here on NQ, weekly has a large wick to the upside, actually on both sides of the market, right? So what do you do when a higher time frame wick has a large wick on higher time frame candle, has a large wick on both sides, right? The highest probability sequences when you have candles like this is going to be trading from the low of week back into the open, or trading high of week back into the open, and that is exactly what we get here, right? So we came from the high of week back into the open. Now this is supplemented with a high probability given that NQ this day has a small wick to the upside, right? This is sort of a New York delayed protraction. I'm going to show you. We're going to drop down to the intraday time frame in a bit, but for now we have the sequence of a high time frame wick, so we're going to be shorting from high of week back into the open, right? So this is going to look like this. You have a small wick at the high on the daily time frame, so you could short this, but this is some sort of a New York reversal, right? So as you can see, 1800 opened up, and we do leave equal lows right here, actually to the tick. I'm pretty sure it's like 1 tick above, right? See, that makes it higher probability. We're trading directly into equal lows, which is this is equal lows right here. What do we get in Asia? We have Asia dropping lower, and then we get a small grind back higher, retracement. We have the new day opening gap SMT right here, as you can see, with ES. So let me go mark that out real quick. Actually, no, it's with YM, right? YM actually did sweep out this high, just like this. So you do have an SMT right there with YM. And so now that we have established that we are going to be trading this lower, and we're coming into the day at 8 a.m. with an SMT at the high and a 2-stage. So it's going to look like this, right? So the sequence here is that if you pay attention to 8:45 close, that is the highest in this sequence on NQ. But let me take your attention here. It looks like this, right? You have a strength switch at the time of the reversal, right? So if you look on YM, the highest point here is 815, while the highest 815 is here. So when you have that SMT, it is going to look like this, right? So you have that SMT first, and you have that strength switch PSP, right? You already kind of have this sequence with NQ, right? And you're going to get that strength switch right at 8:45. So the sequence kind of looks like this, right? With another strength switch PSP, where the asset that is not sweeping out the high is bearish, while the asset that sweeps out a high is bullish. This is its own sequence, right? So pay attention to 815 to 845. These three candles right here in YM. If you look at these three candles as well, it looks like it is a sequence by itself, right? So you see this high is obviously a relevant level. Well, if you want to consider this high is a relevant level, that NQ swept, and you kind of have this strength switch PSP where NQ is closing bearish, right? That is your strength switch PSP, while YM is closing bullish. That is your signal to your sequence to kind of short this. I took this short. Now, what happened after on YM was that YM actually did end up going higher while NQ kept going lower, but that is not something that I can anticipate. This is exactly what I took. Now, I can't anticipate YM going higher, but I shorted NQ here. Now, why short NQ instead of YM? Well, it's very, very simple, right? It's the same sequence as I have with my other short where it was taken on stream. I believe it was May 7, 2026, that it's that example where I took NQ because it is the one that is below this low. It is some sort of advanced premium and discount sequence where you see NQ is very, very far below this low, right? And we have a small wick to the upside. We have kind of this large wick to the downside. So I'm not really expecting NQ to take this high now. I'm expecting this SMT to hold, where if you look at the high right there, we are above it on YM, so clearly NQ is the weakest asset here, or it is the leading to the downside. So you want to take NQ here, and I shorted right after this CSD. Now, I don't need YM to V-shape after this, right? Because already V-shaped. It V-shaped right here. So what I'm expecting price to do is for NQ to do something like this while YM just straight up drops, because YM has already retraced into this lower time frame fair value gap. So we have NQ doing the V-shape while YM already V-shaped lower. So now we have that asset synchronization. Both assets are in sync. Both assets are now bearish. So now I can expect a free fall on both assets now. So I took this closure on NQ and I just simply targeted the equal lows down below, and let this sequence play out. As you can see, we dropped down into the low. Now YM did actually end up decoupling right before that, but that is not something I can anticipate, right? We already have the sequence, we already have NQ dumping, and we get that decoupling right after, which is not something I can really anticipate given that YM already had that V-shaped lower despite the sequence forming. So I can short this with confidence, right? If I took YM here and I took the loss, I would be fine with that because I took a valid sequence. But NQ is the valid asset to take here because NQ is the one that is below the low. So NQ is the weakest one, and we get that decoupling. Now, let me take your attention now to 930, right? This is 930. We're going to study the sequence that happened at 930 itself. Let me mark out 930 on both assets. You see 930, we decouple further, right? And this decoupling here on YM isn't really doing anything. It's not really reaching for anything. Now, I did mention this in the theory part of the lecture that if one asset fails to manipulate and it has targets lower, namely these lows right now, I can expect NQ to reach these lows. I can expect NQ to reach back into the weekly open because we have a small wick on NQ. So what we're getting here is NQ directly at 930 failing to manipulate this low, and therefore, oh my god, my AirPods are gonna die. Because we're failing to manipulate this low, and we get that sweep right there in YM, which is some sort of relevant level, right? Ideally, it's a failure swing to this high, but I don't think we're going to make it in that high because NQ is just failing to manipulate. And NQ is expanding lower with like such momentum, right, that I can just expect YM to trade lower as well. Now, this is another sequence that you could have taken, right? Like this CSD. But I missed because I was in NQ short still at this time. This is something you could have taken because you do have that two-stage sequence, right? With YM, and it is dumping. So you can expect the lagging asset to follow the leading asset because you see how much momentum we have here in NQ that it is just dumping. While YM already swept a a sort of relevant objective here that YM has nowhere to go other than just follow NQ lower, because NQ is dumping such aggressively. This is one of those cases where we're getting like a massive sell-off that the other correlated assets, no matter how far they are decoupled, just have no choice but to kind of follow what NQ is doing. As you can see right there, really good stuff, dude. Really clean day to study. And that is the 2 sequences that you could have taken this day. And that is it for our February 26th example. Let us move on. So here we have the first case of decoupling. This is Monday at April 13, 2026. So let me give you guys the full rundown of this trade and what we're framing it as. So we're opening up Monday on a Q and YM inside of this gap, right? And we're obviously bullish because if you're looking at this sequence right here, if I take your attention to the daily, obviously we're very bullish, right? On the month, we're kind of just expanding. The monthly open is like right here, so it has like a small wick. It could expand as far up as much as it wants, right? So Monday opens up inside of a gap. If you look far back to the left, there's nothing else for price to reverse off of, right? If price is gonna go higher, it needs to go higher off this daily gap. So we're targeting previous day's high here. And because the daily has a small wick, I can kind of anticipate price going higher. Although I would only want this, of course. Like the gap is like the highest probability sequence you could ever have. But we don't get that decoupling here at 9:30, right? It's kind of interesting. We get that decoupling at 7. So let me just clean this up for now. So at 7, we get this decoupling with NQ and YM. Or not, actually, I'll go look at ES for now. So let me show you. Right there, this is 7 a.m. open, right? As you can see, I've marked it out. This is the first example that I showed you guys about why does the markets decouple, right? So here we already have a bullish bias, right? So when you see this move lower, you should already know that this is a manipulation, right? You should already know that this move lower is a manipulation. You shouldn't really be just switching your bias to bearish just because we get this bearish candle, given that we are extremely bullish on the day, right? So what do we do here? We manipulate lower, right? But we don't really hit any key level, right? It's kind of debatable whether or not this is a key level or not. I would prefer it to have swept the lows. That would have been nice. But here's the thing. You don't need a key level. This to take a key level if you're trading this as a lagging asset to the high, right? Because NQ, first off, NQ swept this high. And now we have targets further higher, right? This is our target. This is our ultimate target. So I can expect that price is going to go higher. So let me take your attention back to this high, this 7 a.m. high, which NQ was already swept right here. And we get this asset synchronization sequence right after we sweep the 15-minute high. So this high is going to be a lagging asset draw, right? So this is a lagging asset draw. Now, because you have this framework now, I am expecting YM to catch up to the same high after it decouples, right? So what is the purpose of this decoupling? So we could manipulate a level, which is probably just going to be this level, right? But I don't need YM to manipulate anything, right? It could leave a failure swing down to this low for all it wants, because I'm trading a lagging asset here and the leading asset still had draws beyond it, right? So what do we get immediately after taking this high? We get this SMT fill. Where is it? Yeah, first off, we have the first SMT with YM. Let me make this a bit thicker. Which is an SMT fill on YM. Now, this is not a strength switch, right? Because you want YM to be the one that is not sweeping, and you want NQ to be the one that is sweeping, right? Because NQ is the more bullish asset. Therefore, you want NQ to sweep out a low so that it would allow YM to be stronger. So now YM is the more bearish asset. So I want YM to be the one that is not sweeping the low for a strength switch. So we could synchronize the assets, right? So this is your strength switch right here. This second stage SMT with a strength switch, you get that. I don't need this to be more bullish because it's already bullish. Now, how do we confirm that? We confirm that with lower time frame signatures, right? You get that lower time frame signature, you get that push higher. And I think I took this on like a CFD. I forgot which account I took it on, but I wanted the CSD here, but like it just displaced far too high. Right? I missed this first one, so when we got this, I kind of just entered and I took it to the high. And so yeah, that is that for this example. A very, very clean lagging asset strength switch, right? And we have that asset synchronization right at 9:30. Beautiful stuff. Beautiful stuff. All right, I have an example here of sort of a decoupled market, and it's also in a range. This is a very, very hard day for you to take, given that if you look at PA on the daily, YM is just not moving. NQ is dropping lower to target these Friday highs, Friday lows, I'm going to mark out. As you can see right here, we obviously have a very bearish bias, and we have a two-stage with a strength switch SMT at the highs, which I'll show when we drop to the lower time frame. As you can see, the SMT at the high on YM is a relevant level at this high, right? It kind of looks like this. And then here is your second stage. This is your strength switch. As you can see, first off, look at this low on YM. This low is 11 a.m. on April 27. So if you look at this same low, it is right here. This is the same low. It's this same low. So we are operating now on the premise of the lagging asset, also because we also have this SMT. Now, if you go to the 90-minute, you're going to have this sequence, right, where price shoots above this gap, but more importantly, it's going to take this high. Now, what is so important about this high, this 6 a.m. high on April 28th? It is this high. It is this high on YM. So you're going to have a sequence that looks like this. This is your strength switch SMT that you could use. Let me clean this up. This is your strength switch SMT that you can use, right? And then you could trade this lower. And you can also take NQ lower, given that, look at what price did at 9:30. 9:30 opens up. Let me mark out 9:30 on both assets. So 9:30 here opens up. You see what NQ did? NQ is opening high, while YM is opening low and just expanding lower. But ultimately, NQ is opening high to manipulate a key level, while YM is opening low because it already has manipulated a key level, right? So at the driver, we get this sort of sequence at the highs, and then you have a defined reversal right here on RTY. You have this kind of defined reversal that you could have taken right here in RTY. Now, why do you take RTY here? Obviously, YM is the stronger asset, or in this case, it is the weaker to the downside that is stronger to the upside. And RTY is leading to the downside. You see how RTY is below midnight open while YM is above midnight open? And also you can kind of see this lackluster move on YM while RTY was the one that is expanding lower. Now you could take this short position right here. Kind of somewhere your stop up there, and then you can target these external lows. Now I'm not expecting price to take this low out because this low, and this low are pretty far apart from each other, so I'm not really expecting price to take that out. But this is a very clean short here, giving around 2.8R if you want to take that, if you set your stop at this wick, given that both assets are V-shaping, right? Look at this, 945, every asset is going lower, and that is it. That is how you navigate kind of like this sequence. You see how we're just consolidating the whole day? Asia opens and it consolidates. London opens and we manipulate the highs, but we are trading on the premise that we are sweeping a relevant level at the highs. You see how there's nothing else here? Had RTY not made an SMT with this high, I would consider these equal highs, and therefore I cannot short this until we form a universal sequence lower. It's a beautiful textbook trade right here. If you look at the 4-hour, right? Look at the 4-hour, it is pretty much aligned with the expansion lower. So yeah, that is it for this example. Alright, so here I have an example of when to use RTY. This is a 3-hour RTY trade. And this is an example of when you want to use YM and RTY instead of NQ and YM. However, this isn't a trade taken by me. This is actually a trade taken by my mentor, Afiz. And he recapped his entire trade top down in the Ladders live stream while I was streaming. He hopped on, he recapped the entire trade, he recapped his thought process, how he approaches this trade with protraction profiling, and as well as he gave a lot of sauce afterwards when it comes to kind of anticipating the profile and a lot of sauce afterwards. It is a 20-minute clip from our Ladders live stream that he hopped on. He gave us a lot of sauce. Even I learned a lot. Let me roll the clip for you guys real quick.
It's actually a fair question that Zoro brings up. So you're always fading a daily candle when it's reversing. You need a daily profile to do that, always. So you can't trade a daily candle reversal without a profile. Here. So the reason why I ignore these markets today is because if you look at the weekly chart, starting off with this. The weekly chart here is not going to support expansion through this weekly open. So we can already say that it is very likely that as price comes back into this weekly open, look at this large wick. Say this was a daily candle, guys, okay? If this is a daily candle, this is delayed protraction. So we know that we want to be targeting our daily open. The same applies to this weekly chart, okay? Very large wick. So I'm not looking to trade through an established intraday high past the weekly open, meaning look at this high. This is an intraday high. If you look at the high of the week, it's an intraday high here, okay? Like this. Once we come into the weekly open, we create a new high. This is delayed protraction, so I'm not expecting expansion through here. So now this market is in consolidation. Okay, so we have an established high. Let me make this black. We have an established intra-week high with a very large wick. Okay, so we don't support expansion. And we have an intra-week low, which is made with an SMT on the daily chart, okay, which we saw here with the Dow. So this is consolidation for me. Okay, this here is consolidation on both sides of the market. Now, what we all want to do is look for only long signals, because look at the daily candles profile. Even though we have a large wick, we open with a small opposing run, right, with SMT, okay? So we can only look to trade this candle higher. Unfortunately, the high of the week here and the high of day is not a good target. Eric's probably talked to you about that. He doesn't like to target like intraday highs and lows, especially when the weekly profile is not going to support that. Now, YM is quite different. Okay, we have a very small wick, and we have the driver at 930 confirming expansion. Look at this, driver at 930. Where is it? Here, okay? We expand towards these low resistance highs. So again, there's the only significant high is previous week high, but you can take a look and maybe you can say like, okay, well, there's a swing, a C2 closure here. So you can look for that SMT to be broken, right? This SMT that exists with the NASDAQ. So that could be a draw on liquidity. Now the issue, right, with trading NASDAQ long today, or trading the indices short, is look at the open. So as YM is going to break this SMT, look at the decoupling in this market. Let me use replay. Okay, so we have an obvious decoupling at the open, so we're waiting for a new 4-hour candle to resync, okay, price? This is gonna close the PSP, obviously. So when the next 4-hour candle opens at 10, right, the only thing that can happen is this. You're not going to be targeting this low necessarily, right? Unless this asset reverses after taking the high and we get like a strength switch. Because clearly this daily candle doesn't support reversal, right? And the weekly candle doesn't support expansion higher. So you're kind of trapped here on these assets. So that's why I move away from these assets altogether, okay? That's where I move to RTY. So do my recap. Here's how you trade RTY. Go and replay it. So, the reason why I do it in trading, you guys, because I use NinjaTrader, as you guys know. Okay, so RTY, you can see, is lagging asset today with the YM, if you look at these two assets. Okay, just consider this daily candles range, okay? Just consider this range. When YM comes into the previous day's high, which we saw at the 10 a.m. open, right? This is the previous week high. We have the opportunity just to trade this middle asset, or in this case, the lagging asset. Where is SMT break? I don't know why it's not showing that. Right, to that high, because this is an imbalance in the daily chart, okay? Like this, so you're trading external to internal. But more importantly, the daily profile here is aligned. The daily profile here is not aligned because of this very large wick and we have no target. We don't want to trade towards this high resistance liquidity up here, especially, right? Trading towards this especially is bad given the weekly wick, okay? Delayed protraction, hard to expand past the open, especially to a newly established high. It'd be better to trade towards this high, right? like we did last night, essentially, if we were trading Asia. Now, in here, you can see there's a sequence. So wait for 10 a.m., right? Because at 9:30, you see this market expands into the high. So how do we trade S&P break logic? We wait for a strength switch. Ideally, if there's no objectives in this market, the nice thing is there's lots of objectives. This is all low resistance on YM, so I don't need to see a strength switch here. It's not required, but we get it anyways. So again, we have draws. Most importantly, we have draws on YM. We have equal highs here on the 4-hour. Again, the only relevant swing, guys, is the previous week high, to be honest. But again, look at the wick size of this weekly candle. You can't expect that it's going to get all the way up to this high. You can't expect that. So you're choosing some liquidity inside of this wick, which would just be these daily highs. Okay, it's not going to get up here, very unlikely. But it can get to these highs, okay? It very easily can. Now we look at the new 4-hour candle. These markets are the only ones that at 10 a.m., look at the 4-hour here on Nasdaq and ES. 10 a.m., you can see this in here is consolidation, okay? Trading towards high resistance liquidity. Consolidation towards high resistance liquidity. We don't want to trade this, okay? Even if this goes higher and creates a new intraday high or whatnot, we don't want to trade this, okay? ES here, similar argument, right? It's higher resistance liquidity. You can see it's consolidating, okay? This is a seek and destroy. So the profile of today's candle on the daily chart is the weekly open is acting as resistance because we have a large weekly wick, and this daily candle is struggling to close above the weekly open, which makes sense. So this profile is not going to support expansion higher. It's not going to support expansion lower either, which might have been nice to see if this asset reversed very strong off this high, and then we could have had a large wick on the daily to go lower. So really, it just comes into this when I see this asset not reversing. I hope that makes sense. I'm not seeing where this is not a reversal. Okay, this candle would have to at the new 4-hour open form a very small wick above 10 and reverse. So let's play out some candles. Not the entire candle, that wouldn't be nice. I guess I have to go to a lower time frame. So look at 10 a.m. This would need to form a reversal here with a 2-stage. It'd have to look like this, okay? Where we see something like this, even though this takes the high, but it's a PSP, we have to see an SMT like this, okay? And it has to reverse. But look what happens, okay? This in here is not a this is not a reversal signature. Let me go to the 5-minute chart, let's see. This is just consolidation here, and you're seeing a sequence for YM to get to this high. So importantly, you're seeing this strength switch idea. So we have an imbalance. We have 10 a.m. opening in context of the imbalance. Now I need a Kraken correlation, which is 1 stage, right, to get to the high. So I'm trading continuation. I'm trading open low. Now, Kraken correlation I'm framing this on is this gap fill. So YM at the equities open forms this divergence with the Russell. Okay. So here is our first stage of divergence like this. Okay. Now again, we're not reversing here, so I can trade this as an expansion candle. So I'm looking inside of this range, okay? This SMT fills 1 stage. I'm looking inside of this range. The only place that we can form our low is not going to be these lows, which is all low resistance, guys. If this SMT will break, this will all be low resistance, meaning price will trade into all of this and probably back into this level here at the very least, or even the current day low. So it has to be here. It has to be the gap if we're using this 90-minute fractal. There's nothing else it can be, right, inside this candle's range that we're going to be reacting off of, and 1030 will continue higher from. Let's play out the next candle. You're going to see. So 1030 has to continue higher from that gap in here in this range because we're offering retracement into the open of the new 90-minute candle. That's what you trade. That's what I trade. So we have this gap. It's your invalidation. Now you do get a PSP and whatnot in here. This is a 1 stage, right? The gap, but it's also a PSP into 10 a.m.'s open. This is a 2-stage continuation. Now there's no strength switch here. Notice how there's no strength switch? Well, what you're noticing here is that this asset that made the lower low is now continuing stronger. Okay, so YM is a strength switch at the open with R2Y, but it's still bullish. It still has draws, and we're not reversing here, so it's still going to draw into all of this low resistance. Okay, so I don't need to see this asset become stronger in this fractal. It already showed the bullish divergence here, and then this is your lower time frame strength switch, but it's not necessary. This 2 stage is enough. Now I don't just randomly long here, okay, because I need a reversal. But this is where 10 a.m. can form a very small opposing run because it's opening up as, it's opening up as a C3 closure. We're not going to have enough time to close back in the range at 9:45. So if we take out this low and we resweep, that's not ideal. I don't like these types of two-stage SMTs. You guys have seen me. I don't like this. I like this, right? So either YM is going to come in and take out the low, and we're going to see this asset reverse, or we're just going to continue lower. So I'm not entering until I see some sort of strong indication that this is the low. Now you just have to play up to be patient. We immediately open 10 a.m. and expand higher. Now in this case, there's no real invalidation besides this CSD, which is too close to the break that I'm targeting for. I'm not aiming for anything else. You could target the weekly open, but again, YM should come here and R2Y should come here. So we just use a lower time frame because we want to get involved in the lower half of this range. Okay, we're trading a C3 closure. So in this case, we have a CSD. Now this is not, right, like an order block really, because this is not the candle that makes the low. So I'm just refining these candles, okay? So look, this is the candle that makes the low. We respect that range. We form a propulsion block, which is better. And I'm still waiting for more confirmation because we have no wick, okay? I'm waiting for more confirmation. For me, I need to see a gap printed that I can trade away from, okay? I need to see a gap to protect that low. Or else we have no wick and it's kind of risky, at least to me, I think. So we have a gap that's gonna be printed here. Just wait. Okay, right here, we print the gap. I just long the gap because now my invalidation is the true invalidation. It's this low, 10 a.m. low. Okay, so this is the idea, and then you get R to the high, right? You get 3R. I actually got filled a bit higher. Mine was exactly 3R, so I got filled on the close, somewhere near the close. And then again, you're seeing you have this balanced price range in here, whatever, if you use inversions, whatever. It just, again, you're looking at this entire leg as the manipulation, and this candle is going to be a C3 closure. So you can see, as this candle closes, it doesn't give you that 15-minute closure. However, you can see we're not reversing here. So we're not reversing here. We're going to continue to this high. Now you're already involved. You can go break even as soon as you get a confirmation that this next 15-minute candle opens and creates a protected swing. So we have this gap. This is where I was going to go break even if we had balanced the gap, but we don't. So look here. This is not like anywhere, there's no break even framework in here. So I was considering going break even, but you can see in here, we don't engage this gap. So this order block is not a good order block. And we don't engage this gap, so these opposing candles aren't good candles. So I actually don't get a chance to go break even until a static 2R is reached. So then I just use a static 2R to go break even, which looks like this. There I go break even, right? And then you can see, you're just holding for the S&P break. Okay? And again, the draw on liquidity would be the weekly open again. Look at the wick size of this weekly candle. You're not expecting price to expand through the open, you're not, but the weekly open is a very good draw on liquidity. In fact, that would be your final objective because there's nothing to target. It's very unlikely that price gets above these highs today. Or even this week even, you could say, because of the weekly wick size, right? But trading like a delayed protraction to the weekly open is very nice, or just using the simple logic of trading into the previous day's high is the best logic. Okay, so that's essentially how you approach trading R2Y today. Sorry, I wasn't looking at the chat. That was why I saw it as decoupled. It was the only asset class that gave me a bullish confluence, right? I wanted to look for NASDAQ potentially lower if we got a reversal, but I did not get that. And then the profile for me here is seek and destroy. So you can see this there's no target. I don't want to trade to an intra-week high with a large weekly wick. I think if you gun to my head, we'll close our week near our open, right? This supports the profile of this candle.
Yeah, then the next week we're gonna take the gap.
Yeah, next week we're gonna form a two-stage. Look.
Yeah.
You see that?
That makes sense. YM's gonna catch up.
Right, because YM closing as a what? Reversal candle. Do you see that? YM's closing as a reversal candle, as a lagging asset with all-time highs as its draw. So how do we get to that high? I mean, again, I don't really care about the weekly candle close intraday, but I do care about the weekly candle close on a Friday or a Thursday. Because for me, the objective for me is still YM to break this high. We're not reversing. So if you have SMT break here, right, same logic. How do we get there? Well, we have a C2 closure But again, a large wick. So it's not going to get there this week. However, next week, we're going to see we have an option to open low, forming this two-stage divergence inside the gap, right? And you can see that's why I don't want to trade NASDAQ long. I'm looking for this low to be the low of the weekly candle next week, potentially, right? So that's why any move past the weekly open is undesirable for me to trade. So that's why you can't trade towards this intraday high. ES is an exception here because it doesn't have that high resistance liquidity. This is like low resistance liquidity here, but it's the same logic. Like look at the weekly wick. You don't want to trade past the open here. YM to trade today long, you didn't have to trade past the weekly open. You had to trade to the weekly open. Look at the weekly open.
So much sauce.
Like you had to trade to this weekly open to break the daily SMT, right? And RTY is even better, actually. I think RTY is the best asset to trade today because this here is closely correlated with YM. So anytime YM comes to its weekly open, which is right here, we're watching what happens because it's a large wick. Any draws on liquidity above this weekly open, right, are the only things we can target, like just right above the weekly open. I don't want to trade this as an expansion candle. So that means that if there's a lagging asset here that has the same draw on liquidity near a weekly open, look at it. This is below the weekly open. This is much better. This is external to internal. And you're viewing this entire week as an order paired range. So you're seeing opposing run Monday, Tuesday, Wednesday. Now you're seeing the weekly range capped here. Okay? The weekly range is capped here. You don't have any key levels in here. Look at the weekly chart. It's just this weekly gap. It's just this. So if you're going to form a reversal candle here on a lower time frame, it's going to be here. It has to be off a candle's low. You can see there's nothing left. You're not looking for a reversal off anything left here. It has to be off the previous day's low, and this is where you get that really nice SMT break logic. Okay, so that's why I don't look at the indices today like these ones, because I don't see where you can trade these assets personally.
The fuck, bro.
Sorry for yapping there.
No, it's like just fucking impressive, bro. Cause like I admit, bro, I'm an instructor, yes, but I listened through that whole shit and I just picked up like 5 things I want to implement in my trading.
Just
like yeah, that's what I'm saying. Holy sauce, bro.
Sizes. I think if you guys use the idea of protraction profiles on weekly candles as well, especially on, again, we really only care about protraction profiles in the final session. Think about it. Like, you're only gonna know when you trade. This is why New York trading is ideal for profiling. It's the best profile to trade based on information. You know, in a daily candle by New York, what the daily protraction profile is. Like, look at this candle. We open low, we form an intraday high, and we're trading off of it by the New York Open. This is a seek and destroy profile because you know that the wick size on the daily does not support reversal, okay? So this is not going to be hard to trade as a reversal, very hard. Now, the same thing can be said for the weekly. On a Thursday or a Friday, you know here that because this move is exaggerated, we're going to struggle to close above the weekly open. So when you can combine that with a daily profile, you know that this move higher is likely to be the inside bar of the day. Like, this is likely to be the daily candle right here. In between this low, the low we created, which is right here, and this high. It'd be unlikely to see a high resistance liquidity run.
Hafiz. I hate to interrupt you, but can you restart your stream? Some people can't see your stream. When you restart your screen share, some people see it. So can you just try that so people can see your screen share?
Yeah.
Does that work for you guys? Can you guys see it now? There we go. Okay, now. Okay, there we go.
Sorry about that. So just using protraction profiles, guys, or like, essentially, it's the same thing as saying session profiles. Just treat the session profile for a weekly candle as in days. You know that we're bullish on this weekly candle. Look at the previous week's close, right? The objective is going to be the previous week high. Look left, there's nothing. So when we reach into the previous week high, look at what day that happens on. We trade into the previous week high on Monday. This is setting the tone for a classic expansion week, lower into the range, which we get. That's why everyone was targeting the weekly gap on YM. Now, when we trade into this gap, the reaction we get is a reversal. But because the wick size is so large, where are you going to trade this reversal to? Back to the open. The best trades, right, are back into this opening price. Not really above it, because it's too large of a wick. That is why when you look at YM this week, it makes sense what's happening today, because it's the only asset that has protracted. Look at the open of this daily candle. Look at the difference in the weekly candle. I can't show it to you on the daily. Maybe I can pull up a PO3 indicator.
Wait, what do you want to show?
Just the weekly candle? The weekly candle. Yeah. So at this point in time, this is the only asset.
You want me to send you an indicator?
Yeah, it's all right. I can just show this. This is the only asset on Wednesday, right, that is trading, right, in context, below its weekly open into a key level. Look at, I can't show you the weekly chart. But these assets have that long wick, and they're trading near the open. Especially look at when this session opens, which is New York today. Again, this is why we use daily profiles. Look, New York. It's the only asset that's not traded back to its weekly open with a large extended wick. So this is the protraction phase of the weekly candle from the open. This is forming that body and then reversing from it, right? So this is where the weekly candle would potentially close. And that's the wick. So this is the only asset, right, that has this profile. So it makes sense for this to come back into the open. It makes sense to see this move on the YM. It doesn't make sense to see the previous week high this week, right? That would be an exaggerated move. And that is why you look for these two markets, because these are the only assets that give you a daily profile that matches the weekly one. Go to the 5-minute, click replay at the open, then go back to the daily candle. Does that work? I would love to show you that, yeah. Okay. I want to just take you to 6 a.m. I don't know, TradingView is just chopped, dude. There's so many issues. So this is the New York session. Can we see the weekly candle here? Can I put on a higher time frame candles? Let me try to show you this. Come on, where are the higher time frame candles, bro? I don't know why it's not showing it to me.
What's wrong?
It just sucks, but whatever, I can show it to you. Okay, so this is 6 a.m. This is the open. Okay, this is the only asset. This is the weekly open, sorry. This is the only asset of the triad, right, that has not yet reversed. Okay, so it has, or not yet expanded. It is reversed at a key level, right? We have that daily 2-stage or whatever, the daily SMT that looks like this. It's the only asset that's below the weekly open. That's the draw on liquidity now. The weekly candle's draw is delayed protraction, so it's back to the open. So when you go to the session that you're trading, that worked actually. Thank you for telling me that. Come on, trading view. Go back to the open, 6 a.m. This is the session you're trading, New York session. You expect this asset to reach back into this open. And that's what it does, okay? And this asset to do fucking dick all. Like this asset should stay inside. In my opinion, it should stay inside to this range. Current high, and then the current low. Okay, so that's kind of a little session in profiling. It's really important, especially as you approach the latter sessions of any higher time frame candle. Okay, cool. Back to Eric. Thanks, guys.
Okay, now I have an example here of a decoupling, right, at 9:30 and decoupling after. And this is not something that I can anticipate. This is actually a trade that I took in Lazarus. So let me give you guys a rundown, top down. First off, we're trading at all-time highs, right? And if you look at the weekly, right, the weekly has a small wick, so we can obviously expand higher. But we have already kind of capped off the range here, given that YM just kind of took a high. And YM taking this high was kind of like a trigger for us to go lower because, well, let me show you guys. Let me show you the lower time frame first, right? So the daily on YM has a small wick, but on NQ it's kind of like a mid-sized wick, right? It's kind of like a large wick to the upside. So YM here is more favorable to expand to the downside. But let me mark out 9:30 for now. Let me go mark out 9:30. So here at 9:30, we get that immediate decoupling at 9:30. And if you look at the 4-hour, it is an SMT, right? It's actually a 2-stage. It was a 2-stage before we went higher. So hold on, let me show you guys. Here, before we took out that high, it was a 2-stage on YM. So you see how YM is taking this high as a PSP. Let me explain the two-stage real quick. So this asset is closing bearish, right? And it's opening down here. So you can't anticipate this high to be taken. But this asset is closing bullish, so therefore I can anticipate this high to be taken. Because NQ here has the more bullish close, I can anticipate NQ to take out the high. But since YM has the bearish close, I can't anticipate it to take out the high, but we got it the other way around. So this is a strength switch two-stage SMT. The SMT is the strength switch. Also, we have kind of like a large wick on YM, but it is during a driver, so I can kind of permit that from happening. Anyway, we get another SMT here, I believe. Yeah, we get another SMT at... We get another two-stage SMT, and it kind of looks like this. So first off, So, which candle took out the high? It is 930. 930 on YM took out this high. 930 on NQ did not take out the high. And then we get this form of strength switch SMT, right? And it's kind of spaced out actually. Now this second SMT is kind of spaced out. Let me go clean this up a bit. So the asset that didn't sweep out this high swept the next candle, and the asset that swept out the high did not sweep the next candle. This asset sweeping out the high is more bullish, and therefore I should anticipate this asset to be the one sweeping, but we did not. And this asset not sweeping the high is more bearish, so I can anticipate this not being swept out, but we got it the other way around, and that is the strength switch. And then YM starts to V-shape lower, right? Even before this second stage, right? You could actually take this first SMT even without this strength switch, because again, this is a 4-hour two-stage already. I don't need that second SMT because technically this is a third SMT. This is a third cracking correlation in price. Technically, this is already the second crack, so I could already kind of anticipate it playing out. We get this beautiful V-shape right here on YM, and you kind of get this signature right here. You could take the gap, you could take the 3-minute CSD. There is a 5-minute CSD immediately after confirming that second stage SMT, which you could have gone in on, right? It would look something like this, and you would be targeting some form of low because we're bearish, and we also have all these lows in NQ. Now I took NQ here instead, preceding that second stage. Again, I don't need that second stage because this is technically already the second stage here because of the PSP and the 4-hour, right? Now I took NQ instead here, and I kind of got I got like a half loss. I didn't take YM. I took NQ in this 1-minute closure, and when we broke lower, I kind of trailed it to like this candle high. So I took like a half loss here. Instead of taking YM, I was targeting the daily open for around the 4-hour. Now, why did I take NQ here instead of YM? This comes to asset selection. Let me clean this up. NQ is the one that is not sweeping out this high, and therefore I can anticipate NQ to be delivering. Right? If you also look at these lows, NQ kind of had the better proximity to the draw. But overall, what made me choose NQ really is that it was the one below this low, right? It was like we had a considerable distance to this low. I mean to this high, the SMT that we created, and we're getting that V-shaped lower. Now immediately after that SMT, before that SMT, right, if you look at 930, what 930 did is that it actually moved higher first, creating that SMT, but it took a while for that to do. Whereas YM already kind of swept the high at 930, and we started expanding lower. Now I can't take YM here as NQ is expanding lower. It's also why I could not take YM. Personally, I wait for all assets to V-shape lower first if I'm shorting, and I want all assets to V-shape higher first if I am longing. And if you look at the time the candle V-shape lower is at 933. Now look at what 933 did on NQ. You see how it's still V-shaping higher? Right? We have not yet confirmed that NQ wants to go lower. And because they are correlated assets, if one asset cannot go lower, the other probably cannot as well. Now, we can in a decoupled setting, but I was not anticipating decoupling here. You cannot anticipate decoupling, my opinion. So, if NQ is not V-shaping lower, I cannot short YM. So your options here would be to wait for NQ to V-shape lower and then you take YM. But if YM is very, very low in the range, then that is when I would opt to take ES. But ES was just a mess here. We're not even going to pay attention to that. So yeah, I waited for the V-shaped lower here, right? By the time V-shaped lower, YM was already kind of low in the range, and you see how it's actually pretty interesting. If you look at the two candles that V-shaped lower, 942 and 939. Let's go a bit deeper in there. You see how when NQ is expanding lower, YM was retracing higher. And therefore, what I was seeing this as is that NQ will kind of continue where NQ here would retrace to would like do something like this to drop lower, while YM is already retraced back into the gap, into the like the breaker, the CSD, whatever PDRA you want to use, and then we would drop lower. That's what I was expecting price to do. Now I took NQ here because NQ is the weakest asset overall, and YM is retracing higher, and NQ is going lower. Now I can assume that the assets are now in sync because this has V-shaped lower. I don't need YM to do another V-shaped lower because YM already made the V-shape here, and YM is already bearish, so I don't need it to turn bearish anymore. But I do need this asset to turn bearish, okay? And if you look at how YM played out, I mean, it just dumped lower. So if you took YM here, it's a really, really great short. Now, one thing to note here was that RTY had a really, really good sequence here, actually, at 9:30. If I bring you to RTY. Now, this is the cleanest asset that you could have taken, right? Look at the V-shape here. Directly at 9:30, you could have taken something like this to the low, right? Get your 3R. Now you could take this because YM was V-shaping lower at the time of your entry in RTY, but I missed it because I was live, and I was setting up my live directly at 9:30, right? RTY was the cleanest asset to take here, given that RTY is the weakest. It was trading below these lows, right? And as you can see, we have that SMT at the high. We have that V-shape directly at 9:30. You have that open high London reversal, right? New York protraction, New York continuation profile there. But yeah, that is our example for May 7, 2026. We have probably one of the most textbook advanced premium and discount days. If you're looking at this is May 8th. It's probably one of my favorite decoupled asset moments. So if you look here, right, obviously NQ is like way up at all-time highs, and we get this kind of strength switch with an SMT fill. Now, if you're longing from that SMT fill, it's a really, really great trade, right? If you're trying to long from that SMT fill, problem is we get that SMT fill directly at 1800, right? And I was asleep at this, so I couldn't really long this. But if you're looking at YM, right, it's obviously a catch-up sequence because YM is like the asset that is weaker than NQ. And we kind of get that SMT fill right here. That is your strength switch. Now, I can't long this because number one, you have a large wick and you're already kind of at the open of that wick, so I can't really anticipate YM to break these 4 protected swings at the highs, right? My thought process would do that at some point we're going to retrace, okay? That is my thought process. And we get this APD sequence between YM and NQ. As you can see, it kind of looks like this. And I actually took a loss here. I took a loss and a win during this day, okay? It's probably like a very, very questionable day. So first off, I want to see price retrace because we're kind of just doing this. I want to see like a down close day, which we obviously didn't get. Let me take your attention here. We first have this advanced premium discount SMT, and you kind of have a, well, this isn't a PSP, right? Like, I thought I saw like a 30-minute PSP here. I tried to short this and kind of got stopped. I thought this was a PSP. I was on my phone. I shorted this and I kind of got stopped. Right, I put my stop like up here and I got swept before price dropped lower. Now, you could frame both sides of this trade, okay? Let me give you guys the first framework. So, I was framing longs here. You see how we're decoupled, like 930 dumps on YM. 930 just kind of goes higher than Q. You kind of get this strength switch asset sync right here. As you can see, this 10 a.m. low is a gap, while the 10 a.m. low here is not a gap. So you're getting that catch-up sequence. So it kind of looks like that, right? You have an SMT fill, you have that gap fill, strength switch. Obviously, I can't trade NQ here because NQ doesn't really have a draw anymore. It's at all-time highs. I don't know how far it wants to go, but I can anticipate YM at least hitting this high. So we get that SMT fill. I take my entry on this gap right here, and I was targeting around 2.5R, and I got stopped. Now, after I got stopped, I was convinced that we were going to go back to the weekly open, because there is actually another sequence that you could take here, which is another strength stretch SMT. So it's very, very two-sided, just like I said. If you look at the highest point here, this is 10.15 on NQ, and we get that strength switch, right, where NQ, the more bullish asset, the one that's all-time highs, is not sweeping out a high, while YM, the asset that is below the all-time highs, is the one sweeping out the high. Right here, it kind of looks like this. So the highest point here is 10.30, the highest point here is 10.15. You kind of have that, and you have a bearish close. Now, this bearish close aligns YM lower. This is bearish close is basically just telling me that, okay, YM is going to dump lower now. And you have this on NQ. Right after that, I wasn't really expecting, like, I didn't need NQ to V-shape lower here, because NQ has already V-shaped lower, but I'm not really framing it off of that. I'm rather framing the kind of continuation lower here on RTY. So if you look at RTY, it's already V-shaped lower. So another study here where you kind of want to use RTY and YM with your alignment if NQ and YM are decoupled, and that is exactly what we get here. You have a two-stage, right, inside of a gap. Well, it's not inside of a gap technically, but it is in the gap. It's not inside, but it was in the proximity of the gap. You kind of get that two-stage, and it's a strength switch PSP as well, where if you look, the asset that swept the high should be closing bullish, and the asset that didn't sweep the high here should be closing bearish, but you get it the other way around. The asset that swept the high is closing bearish, while the asset that didn't sweep a high is closing bullish. You get that strength switch, you get the V-shape lower on both assets. I don't need this to V-shape, already kind of V-shape lower. And with that, I took YM, this closure right here, and I was targeting 1800 open. Now, should I have targeted the daily gap? Probably, but I didn't. I just wanted to get out of this trade. I was like down like 2 losses already into the session, given this short where I got souped, and this long where I was like completely on the wrong side of the market, although it was valid. So I held this trade up into the open for around a 3.8R. I lost 2R, so that puts me at a net 1.8R or something around that figure for the day. Let's move on to the next example. For my most recent and very last example in NQ here, we have May 19, and we have this candle 2 closure. And so even if we are pretty bullish on the week, I would expect NQ to at least take this weekly gap lower. Now, we did get that kind of SMT fill with the gap, but as you can see how far lower we went with the gap. And so I'm kind of expecting NQ to kind of break that SMT and take this gap as the draw. Okay, let's move on to the daily. We have a small wick to the upside on both assets. So I'm kind of expecting price to be able to take this draw. This is my draw on the day, okay? And now that we have our bearish bias on the weekly and at the daily, let's look at what the intraday has done. If you look at the intraday, we form our high of week on Asia. We don't really form it anywhere significant, and that's fine. You don't need it as long as you expand away and you create gaps, and that is exactly what we do here. You see how we're just expanding away, we're creating these gaps, and that is pretty much telling me as long as these gaps get respected and we don't form any bullish gaps, we should be pretty good to go lower. And we are awfully close to the weekly low as well, that weekly gap. Now, what do we do at 9:30? Okay, what do we do at 9:30? So this is 9:30 open. NQ protracts higher, right? Manipulates the highs. These are the highs that it manipulated, right? As you can see. And YM just immediately goes lower. Now again, what do I want to see here for an asset synchronization? Because NQ is the one that moved higher, I want either of 3 things. Now, I want either a gap where NQ doesn't fill the gap, and I want YM to fill the gap, although if we form a gap this low in the range, I probably wouldn't take it because by then it's very, very low in the range already. Number 2 is a strength switch PSP, where I want this asset that swept the highs, I want this to close bearish, while this asset that is just obviously expanding lower, I want this to close bullish. And then third of all, I want a strength switch SMT where the asset that swept the highs, this 930 high, I want some form of SMT here where it kind of looks like this. And YM, I want YM to sweep some form of high as well, while NQ does not, allowing for asset synchronization. And that is exactly what we get here. You get this strength switch SMT, which also happens to be a gap fill on YM. But for the purposes of this, I'm just going to be using this high as your strength switch. So again, you see how this asset, the one that is very, very strong, is more bullish, is not sweeping out the high, while the asset that is very bearish is sweeping out this high, and we're tapping into a 15-minute fair value gap. That is your asset synchronization. That is your strength switch. That allows both assets to be synchronized now. I can expect NQ to hit the weekly low off of that synchronization, and we get this V-shaped lower on NQ. Very beautiful stuff. I can't take this because this doesn't really give 2R to the lows, right? So I refined my entry. I was taking the retest of this order block right here, and I just had my stop somewhere above EQ, and I was waiting for a retest. As you can see here, very, very textbook, very clean trade. That is my last example for the decoupled markets. I hope you guys learned a lot during this video. I hope you guys picked up on a lot of things. I hope this clears up a lot of confusion for you guys when it comes to trading decoupled markets with asset synchronization. I hope you guys learned a lot from this video. Okay, I'm going to be looking to put out a lot more long form lectures for you guys. So yeah, peace.